So how do we get information, financial information, into the books? Well, first of all, let's understand that we're going to have accounts. You have account, you may have a, like I said, you may have a checking account, you may have a Netflix account, you may have a cell phone account. Those are all mechanisms for recording inflows and outflows of money. We're going to have that here also in it. But let me tell you a story about, this is an honest to goodness story, about making journal entries into the computer. First of all, the accounting was a perfect place to use the computers. Repetitive transactions, it need to be stored for forever, kind of boring at times. Those computers were so perfect to run payroll accounting and then accounting. So what happens when we get information into the computer? Well, I told you we use debits and credits. Every journal entry we make has to be balanced. What do I mean by that? It means that the total down here in the debit column had to equal the total in the credit column. Okay. So when you made a journal entry, you could have a journal entry here, JE, and then you could have names of the accounts, and then the debits and the credits. And you just list all the accounts, the amounts of money under the debits and credits. Good. Now, if you and I did this, wrote it up, added up the numbers, turned out that the totals equaled each other, well, we say, okay, it's a balanced entry. Could be technically incorrect, but it's a balanced entry. What do we mean by that? The debits equal the credits. All right, great. Fine. Now, what do we have to do? We're humans. We're now automating this system. We're going from a manual accounting system to an automated accounting system. How are we going to tell the computer that this is a balanced entry? How's the computer going to be able to compute whether it's a balanced entry? All right, so let's go back, and we had our journal entries, and remember pregnant Alice from what I discussed in the past. And so we do we make a bunch of entries over here. We name the names, put in the debit and the credit. The programmers, the coders said, whoa, how are we going to keep track of this in the computer? Oh, I got an idea. Boom! We'll make assets a positive number. We'll make expenses a positive number. All debit balances will have a positive number, or debit entries, increases and balances. Credit entries will have a negative number. Oh, all right. So what does that do over here? We have debits, credits, and the computer adds up both columns, and if the mathematical result is 0, we have a balanced entry. Could be incorrect entries, technically incorrect entries, but the fact is it was a balanced entry. We're set to go. Great. Until what? Until we needed to produce the financial statements. All right, well, what could possibly go wrong with that? Well, here's what went wrong. We list the income statement, and we have income, and we have expenses. Now remember, income over here is a credit entry. It's increased with a credit. So it had a negative number. Expenses were a positive number, so just had a positive number there. With this, it's explicit, implicitly a positive number. So what happens if we had a net profit? Well, I took my expenses and my debits and subtracted from my credits in the revenue account, and I came out with a profit. Except when it came to the computer, the profit had a negative sign in front of it. Why? Because income was greater than expenses. Or, stated in debits and credits, my credits were greater than my debits, which means I had a profit, but it shows up with a negative side. Oh! You should have seen management blow their heads apart. Oh, this was detrimental. This was painful going through financial statements, especially income statement. Oh, and by the way, the liabilities were a negative number. Well, that's pretty good. That works out pretty. Capital, are you kidding me? Capital is a negative number. What are you talking about? This is crazy. This is obscene. And this was the way the programs were written. And management really had a hard time interpreting a negative number as a good number. Negative number, good. They couldn't swallow that. So what happened? How did that solve that? How are we going to solve that? Asked the coders. And they said, how are we going to do this? And then someone remembered Mr. Greenhill from their 6th grade math course at Memorial Middle School. And he taught that, maybe you should get a little negative. What are you talking about? What if you, behind the scenes, before producing the financial statements, take these numbers and multiply them by -1? So now my income shows to have a positive number. My expenses show to have a negative number. Because a negative times a negative is positive. Positive times a negative would be a negative. And that resolved the whole problem. And now you got a profit, and there was no question about it. And what's the moral of the story? It proves to be a little -1 every so often. Okay? Don't underestimate the -1 number anymore. And that was solving the mystery, the big mystery. And we've only gone crazy ever since then.